Hello, I'm Doug Tredenik of Greenway Mortgage, and in today's video I'm going to run some numbers and discuss how you can buy a home using the USDA Home Loan Program. A few things to know about the USDA program is that there are income limitations. There is a ceiling on family income to qualify for this loan. Also, the USDA loans are not available in all locations. They are available mostly in Sussex County. Okay, so let's take a look at the USDA home loan and take a look at our sample property here, 13 Lakeside Drive in Vernon, which is courtesy of Marcello Lavarini of Berkshire Hathaway Gross & Jansen Realtors. His information is right here. If you're looking to buy or sell a home in Vernon, please feel free to reach out to him and speak to him. Okay, let's take a look at our numbers on 13 Lakeside Drive in Vernon, which is offered at $169,900. If you notice here in my numbers, I've got a first loan amount of $173,298. The reason for that is the USDA loan has a 2% funding fee, which equates to $3,398, which is able to be financed into the loan, which I'm showing here in this example we're doing. That's what accounts for the higher loan amount, $173,298. Today's interest rate on a USDA mortgage as of April 3rd, 2015 is 3.375%. I've estimated closing costs on this transaction to be $7,560. Now, if you were to take the loan amount times 3.375% interest rate, we come up with a principal and interest on this loan of $766 a month. We add to that the taxes and insurance of $420 a month. That's an estimation. The $78 here for mortgage insurance is required on all USDA loans. That leaves us with a payment of $1,264 in this example. And in this example, we'll be bringing $7,560 to the closing table. Now, in my second example here, I'm going to get a little creative and offer an example of how you can be helped with those closing costs. Now, we have the same loan amount, and we have the same $7,560 in closing costs. But in this example, I'm going to raise the interest rate to 4%. Now, what that does is, by raising the interest rate to 4%, I'm going to be able to offer you a lender credit of $3,610, which you can use towards your closing costs. Now, you subtract the $3,610 from the $7,560, that leaves you with only $3,950 to be bringing to the table. The higher interest rate, though, does give you a higher principal and interest amount, which translates to a higher monthly payment of $1,325. Now, in my last example here, I'm going to take your help one step further. I'm going to combine our lender credit of $3,610 with a seller's concession. In any real estate transaction, it's possible to ask the seller for a credit to help to offset your closing costs. So in this example, we're going to offer the seller the full price of $169,900, but we're going to ask for a seller concession of $3,950 to go towards your closing costs. Combined with the seller credit, that would leave you with bringing little or no money to the closing table on this example. Now, the principal and interest is the same because it's the same rate, 4%. The escrows for the real estate taxes and insurance are the same. The mortgage insurance is the same, and your payment would be $1,325. Now, please be aware that this is only an example. Your own specific circumstances, your credit score, your income, your assets, your ability to repay the loan, and many other variables need to be taken into consideration when applying for a mortgage loan. That's why I'm here to help and answer any questions you may have. I'm available to go over this program in detail and at your convenience. My contact information is right here, and you can log on to my website, www.dougsmortgage.com. We've got plenty of information and resources there to help you make an educated decision. And of course, you'd be able to apply online. I thank you, and I look forward to speaking to you.